Alright, cool. So buying and selling in the foreign exchange market, or forex trading to be more specific. What is that, right? What is that? Now there's a saying that goes buy low, sell high. Well, this image right here explains that, right? It explains that to the fullest. As you can see, price dropped. And then this person right here, this person took a buy position, right? They actually entered the market when the price was at its lowest. They got in right over here, and then price goes up. They in profit. Right over here, they closed that buy position. They took a sell position, right? And then price dropped. They in profit. And then right over here, they closed that sell. They took a buy. You understand? So this is a good explanation of buy low, sell high, right? This is it right here. You want to buy when price is at its lowest and sell when it's at its highest. So looking at this, when you buy, you expect price to go up, right? Let me just do this. When you buy, you expect price to go up, and when you sell, you expect price to drop. You understand? Now let's say this line right here. This is my entry point. This is where I took a buy. Took a buy, right? And then price goes up. I'm happy. And then all of a sudden it drops, right? Going through my entry level. Now when it does that, my account will be at a negative. That means price is going against my direction. So my account will be affected. Same for a sell, right? I took a sell right over here. This is a sell. And then price goes back, goes through my entry level, and then keeps on going up. Now this means I'll be at a negative also. So when you take a buy and price goes in the opposite direction, your account gets affected. And then when you take a sell, price goes in the opposite direction, your account gets affected. So that's just it. That's just buying and selling in the foreign exchange market, right? And then if I wanted to explain this to go in a bit deeper, let me just do this. Let me just erase that and then use this example right here. Let's say you have seen a couple of sneakers, like you went to the mall and saw sneakers that you have liked, and then they were retailing for $100. Let me just try and draw those sneakers. These are the sneakers that you saw, by the way. Very good looking sneakers, right? They were retailing for $100. Then you told someone about them, right? You told someone about the sneakers that you liked and you want to buy, and then that person actually offered you $100 to buy them. And then by the time you go back to the store, you will realize that, or you will see that the price has dropped to $50. $50. Now what does this say? This tells us that this is the best price to buy these shoes, right? Because remember, the retail price is $100, and then when you got there, it was on sale. You bought them for $50, so it's good. You buy them right at this price mark. You understand? You buy them for $50, and then a couple of days at the store, price returns to $100, right? Now the sale is finished. No more sale. The price is back to $100. You bought them at $50. And then someone comes to you, since they couldn't find these shoes anymore at the store. They come to you and then want to buy them from you. You sell them at the very same amount they were retailing for, which is $100. So that means you have made a profit of $50. Understand? You have made a profit of $50. What I mean by that, you bought them at $50, you sold them at $100. So you have made a profit of $50. So this is what they mean. You buy high, you sell low. Buy high, sell low. I think this is a very good example. This is a very good example. So that's it for buying and selling. Let's go on to the next slide.